Harold, walk us through why you are constructive on Asian equities next year, particularly H shares, despite all the macroeconomic challenges and the fallout from Evergrande.
Yeah, I mean, it's easy to be very negative about it, right? The dollar continues to strengthen probably a little bit. You mentioned Evergrande, all sorts of other issues taking place. But I think that's to a large extent actually being priced in. If you look at how people are positioned in the region, everybody's underweight. Everybody's underweight on China. The average mutual funds, like that, is underweight on China. Can't really sell that much more. Otherwise, all sorts of portfolio tracking issues are going to come into place. So that is priced in. That is in the positioning data. Now, then you look forward, and you guys were just talking about it. 2022, in 12 months' time, we have a party congress. There already is more talk about stability. The shift is moving away from kind of risk, from growth to risk management, to providing some more liquidity into Chinese markets.
Right.
Reserve requirement cuts have been discussed. Now, if you add that up, then you say, hey, it's cheap. People are underweight. Things look to be a little bit better next year. On the margin, that means people have to buy into China, and that could support the Chinese market, and to a certain extent, the rest of the region as well.
Can you expand on that, Harold, with reference to the property market? Because you're quite right. I mean, a rising urbanisation rate, social stability, common prosperity, affordable housing, they all go hand in hand. Does that mean that you want to be a buyer of those stronger credits in the property space, despite the spasms that we are seeing in high-yield property in China?
Yeah, I actually think so, yes. So if you look at the situation in the property market, maybe take a longer-term perspective. So in 2018, they said, listen, we need to start to deal with some of the high debt situation in the economy. We're going to have to deleverage. And they let some smaller banks go, 2019 as well, just to show the market, hey, this is happening. Now we got Evergrande. And in the future, we will have to see more of that maybe in local government debt issues or something like that. But now, for the moment, it's Evergrande. But then you look at some of the larger property companies that have been dragged down by the situation. Will they get through this? Yes. Some of these companies have balance sheets that are reasonably fine, can weather this. They will be around in 2 years' time. Now, at the moment, Chinese property buyers are saying, well, hey, it's very difficult to buy property now because if I put my money up and these guys go bankrupt, I lose everything. So there's a lot of nervousness in the market. Transaction action levels are low. But it seems now that the government is trying to deal with that. It's trying to bring a bit of confidence back by providing liquidity, talking about reserve requirements, etc. So I think they're trying to stabilize this. They don't want the property market to boom from here. They just don't want it to fall either. Yeah.